Act. The Truth in Lending Act is a consumer protection law that's been around for a long time, filed by or issued by the federal government. It's meant to cover certain refinance mortgage loans as well as credit card transactions and other financial relationships. What it does is it requires a creditor to provide certain types of disclosures, such as how much is it going to cost the consumer to get this credit, the mortgage loan or the credit card. It also requires the creditor to provide information about the interest rate, whether it's adjustable, how it can change. It also requires the creditor to provide disclosures about the borrower's right to cancel either the loan transaction or the credit card transaction if they choose to do so. If there is an inaccurate disclosure, if the creditor hasn't disclosed the right information in the papers or has not given all of the disclosures to the consumer has a number of rights, including the right to rescind. For instance, in a mortgage loan, they could rescind the mortgage. They have a right to get all of the money back that they've paid under a mortgage. They have a right to get back other costs, such as closing costs and other fees that they might have paid during the course of the loan transaction. And this cancellation right extends all the way up to 3 years after the loan closing if the consumer hasn't been provided accurate or complete disclosures. There have been some recent developments in the Truth in Lending Act which are significant, some of which still have to be played out in the courts and in Congress. Number one, and most recently, the financial regulation has been passed by Congress, which has created a consumer protection agency. And that's going to be run by the federal government. They're going to now, under this agency, control and regulate the Truth in Lending Act. And that's going to affect how the Truth in Lending Act is enforced against lenders, creditors, and borrowers. Another important development that's taken place in the Truth in Lending Act is with regard to the borrower's right to rescind. Now, under the Truth in Lending Act, a borrower can rescind, but has an obligation to pay back the loan proceeds if they want to cancel, for instance, the mortgage loan transaction. So, for example, if you are given $100,000 in a loan and you want to cancel the loan, the borrower would have to pay back $100,000 minus any amounts that the borrower has paid during the course of the loan or other fees. Over the last several years, courts have tried to figure out whether the borrower has to prove that they have the ability to pay that money back, and that's the obligation to tender. And recently, many appellate courts have held that a borrower has to prove upfront that they can tender or pay back the loan proceeds. If they can't do that, even if there's a violation of the Truth in Lending Act, they are not entitled to rescind the loan. And that is significant, especially in this economy where borrowers don't have the ability to go out, get another mortgage, and pay back the loan. So that is a very significant effect on the Truth in Lending Act.